What about that? Is that coming through? There we go. All right, I think we got a fix there. Yeah, I hear that. Okay, cool. Don't know what happened there. A little technical glitch. Much better. Good. Good. Okay, close that. I need a, what is Rogan called? Jamie? I need a DJ or something kicking around. But glad we got that sorted out. So what I was just saying is, again, if you're new here, this is just a preview of kind of what I do each night for Stats Edge Pro, where I just go through and take a look at all the markets, try to figure out what's going to happen next. For Stats Edge, I compile this into a blog post, but I come live once a week just to kind of shoot the shit with you guys, see what's going on, see what's cooking. As always, I love the community interaction, so let's kind of chat as it goes. Game plan is we're going to first do crypto, then we're going to do currencies, then we're going to go into the equity market as a whole, like ETFs and all that. And then I will be creating my watch list for stocks that I'm interested from a swing trading point of view for Monday. So that's the time where if you've got a chart that you want me to look at, you got any questions or anything like that, certainly just pop them in chat. We'll go through those at that time. So now let's just go in here. Perfect. So yeah, we'll just start right away with crypto. Ugly. It's been ugly and it's been a bit choppy. Just overall, I guess maybe just for what I'm experiencing for my personal trading. I was watching, this again, everybody, I think every trader on earth is watching this 41 to 40,000 area. When we broke down here, I took a small short, made like a little bit of money on that, and then got stopped out break even. And then I took a long here, and I took a little bit out up here, and then I was then stopped out at the rest break even. So just chopping around this level. I wouldn't be shocked if that continues. But until it kind of makes up its mind one way or the other and pushes down to 30,000 or up, far enough away from 41,000, it's interesting. I still think we're going to be in chop mode. So I don't think there's anything wrong with that. If you want to then still trade crypto, I think you're best to go shorter term in time frame, just because when the long-term markets are choppy, sometimes you can actually you can get some moves if you're looking at other time frames. So in choppy markets, you either zoom in or zoom out. Right? You either have to kind of leave it alone entirely, or you've got to play on a shorter, kind of more aggressive time frame. So I'm just saying, can't be long under 41K. I just don't think you can be. I think you got to wait till it gets and holds over it. I didn't take a short this time around on the way down. Maybe if we break these levels, I'll be interested in shorting. But until then, I think we have to just sit out. There's nothing wrong with that. The old trader saying that cash is a position. The reason you'll see me kind of draw these notes up is this is what it will look like on the blog post for the pro members when all that's kind of said and done. What was this anyway? Oh yeah, that's something I want to keep. So we want to share that, and let's just put that in photos right now and then delete it. There we go. So that's really going to be most of crypto, because it's one of those things that these crypto companies actually do a pretty good job of being uncorrelated until the moment Bitcoin really starts to get hit, and then they all become correlated again. And that's the same as the equity market. You can have a whole bunch of uncorrelated equities, but then the moment sell-offs start happening, they start to go to, all those correlations go to 1. right? And we saw it during every crash or every kind of bear market ever. Correlations start to converge to 1, which just means that things become kind of perfectly correlated. This Cosmos, I'm still interested in just because it's holding up really well over this kind of recent highs here. So it's holding up, had a little bleed through here, but now it's putting in this big area right here. So I'm interested in this one. Again, I don't like to just buy when they hit the support, but I want to watch it. So the reason I said 33 is it's going to be over this spike. Maybe if this kind of materializes for a little longer, I'll try like 42. But basically, instead of just buying it when it's down here at the support, I want to see it bounce off first. Just give me a little confirmation before I'm committing my money into the market. And same with all these are kind of looking the same. The only other one I want to look at real quick is ADA or Cardano. Yeah, it broke down. So I've been playing this a fair bit off of this $1 level and then selling chunks and then usually getting stopped out flat. And then I bought a little bit more here when it bounced off again. And I sold a chunk and got stopped out flat. So I've got a stop limit order on this around, I think it's like 110 or 115. Just trying to see if we can get a bounce off this area. But as of now, it's broken and closed below that. So I'm not interested in that anymore. This one, again, I just wanted to point out, you've got a clear level here at 1. So if it looks like it's going to break and hold above 1, then I think you're fine. And then under 1 is just where you got to exit. But it looks like that's broken down now. And then, this, I don't know how much long is in this candle. A couple hours, but it's closed below that. So again, crypto is still, just to summarize, BCUSD, as long as we're under 41,000 in Bitcoin, I'm not really super interested in the other currencies. Some of them look interesting, like Mana or Decentraland, doing Kraken right here. So we've got this anchored VWAP from the breakout, and it's got a lot of resistance here. So 350, so you can see I've noted 350 on this. I'll actually share this chart with the pro members too, in case it gets there quickly. But if this can kind of come up and retake this zone right here, I'm interested. But as it's down here, I don't see like there's anything to do. Do I only trade crypto pair in US dollars? Yeah, personally. And the main reason behind that is liquidity. If you look at the same crypto, so let's zoom in on like a shorter term on Bitcoin. Look how you can tell the liquidity because there's really no gaps in the candles. But then if you do like Bitcoin CAD in Kraken, you can instantly see how much less liquid it is. So that's the main reason, is just liquidity. And the fact that I'm not really worried about currency risk being Canadian myself, just because, the Canadian dollar is going to move 1 or 2%, and that will be a big move. And Bitcoin is going to move 20 to 30%. So it's really not a huge factor of whether or not I'm making or not. But if liquidity on your exchange is the same, then just trade whatever you'd like. But for me, on the US dollar Bitcoin, again, 41,000, I just put an alert there. So Kraken will send a notification to my phone and my Apple Watch every time it breaks 41,000 in kind of either direction. So I don't really need to stare at it all day. It's either going to break and it's going to go or not. Same thing like I was talking about with Cardano, right? It's either going to come up kind of this 110, 115 area and alert me. I actually have a stop limit, which I was talking about in this as well. So it's either going to hit that, alert me and hit that stop limit and get me in, or if it just falls down from here, I don't care. That's one of the reasons why I really like the style that trading that I do, which is just reactionary, I guess is the best way to put it, where I say, this is my level, this is where I'm interested in. Let me put either a notification or an alert or something out there that just says, hey, if it does this, get me involved, and then I can just leave it because I don't really, I don't want to stare at these things, right? So, automate away whatever you can. This frees up brain power to focus on other things. So, kind of worried there. Nothing I see there is super bullish. Now over on to the traditional currencies, I guess is a good way to put it, side of things. On these traditional currencies, we're seeing a lot of potential strength in the US dollars. And if this potential strength in the US dollar continues, then I think you're just going to have every other currency react. So Fed minutes, stuff like that, that's really going to push the dollar. But on this long-term chart of this dollar, I've been seeing this kind of cup and handle style look for a very long time. So this gray shaded area, and again, if anyone's new to me, when you see these shaded areas in the chart, this is how I just draw support and resistance. I don't really believe in support and resistance lines. They're always zones and areas. So I draw these shaded areas just to kind of represent the zone that I think this is in. So we're holding above that now in this. And again, this is just the dollar index. I think that note of it looking strong works. So the way the dollar index works, it's just the dollar versus a basket of other traditional currencies, right? So, be a little bit of euro, a little bit of yen, a little bit of CAD, a little bit of Kiwi, that kind of thing in it. So now we'll just scan through the different currencies. Australian dollar, when we broke down here, I got a pretty good trade out of this breakdown last time. Maybe we'll get another one of these again if we get a breakdown through here. Maybe. So we'll just draw one of those. And it's important to know with some of these currencies, so Aussie dollar is kind of the same as Canadian dollar, in which it's considered a resource or a petro currency, essentially just meaning that a lot of Australia, just like a lot of Canada, has a lot to do with looking at, draw the same kind of breakdown, actually draw that a little tighter. It has a lot to do with the value of oil, and the value of oil is going to have a lot to do with, looking at the USO and these commodity price things that we'll look at in a second. So same kind of thing. I drew this anchored VWAP from this most recent high in the pound, and I've been just taking these short trades. The Stats Edge Pro guy will tell you. I've been doing this. I've had this shorting off a VWAP resistance for a long time. I just wait for it to fail. You can take a little short, kind of scalp out as it goes. So another thing, if we kind of break down here on the pound, I may take another short. Stop's going to go right above this recent swing high. See if I can get another push down on the pound. And again, you got to think, so what are the two things when you're looking at these currencies that could affect the move of these currencies? You either have if the pound goes down in value or if the US dollar goes up in value. And I showed you that US dollar index chart, and that's the reason that I like to start there, is I just want to make sure, pull that down a bit. There we go, center myself as I lean back on this lazy Sunday. Yeah, just basically trying to say if the US dollar is going to go up and UUP is going to increase, how is the best way for me to take advantage of it? In the Forex markets, you can get a lot more when it comes to leverage and that type of thing. Canadian dollar is a little bit weird. Again, it's USD CAD is anyway the way my Forex broker quotes it, but it's really got all to do with this 128 zone. If we can break above that, we can continue. Canada is really a petro currency, though, which means it's going to matter greatly, even more than a lot of these other currencies, just how much the USO or how much oil in general moves is going to have a lot to do with our market. So speaking of that, we will hop into the equity markets. and then into individual securities. And then that's when I'll look at any securities people want, and I'll just remind you questions if you got them, likes if you're liking the stream. Again, I hate doing that stuff, but that's just kind of the way the YouTube works. I got to ask for them. So now we're going to go through my ETF list. So this is basically just going to sort by a myriad of ETFs, basically trying to get a view under the market. But actually, let's just look at the market as a whole first. Hey, Sam. How's it going? So, Ugly Friday, of course, right? We had a sell-off. We closed right at kind of those lows on Friday. That actually brings me to a blog post that I wrote. If you're interested, again, links in the description below for my website, all of that, which here you can sign up for my email list, which again, I never do anything other than if I do new blog posts or something. So with this one, basically what I did is I looked at the SPY and I said, well, what happens if it closes at the low of its range, right? So every time it closed at the low of its range, what would happen if you bought it then and you held it for 3 days and you sold it? And I made, this is the equity chart from 2009 to date, just by buying the market in an uptrend, close at the low of the day, hold it for 3 days. So every time I see a close like this, where we close kind of right at the low of the day there, that makes me think, okay, and a lot of people think that this is a gross close. Is it though, right? With the long weekend, I didn't buy into this close, but I usually do. Just because, again, the stats say that you should take a look. You should do that. I guess if you turn off post-market hours, it doesn't look nearly as bad. But for me, this bottom resistance line that I have highlighted here, and the reason for it is basically just going back right here. All these areas, you can see where it was resistance before and then support for a long period of time. This is the anchored view app from 2021. We held up there very well, so the beginning of 2021. And then this is the anchored view app from all-time highs. So you can see we're just kind of chopping around between there. Until that happens, I really don't think there's much to do, much to talk about with the individual market, because at some point it's going to have to resolve itself. And the question is, do you want to try to be the guy to guess which way it's going to happen and take that shot now if you're trading the overall market? Or do you just want to say, listen, as soon as you resolve yourself, as soon as you're above kind of this 460 or below, call it 420, that's when I'll be interested. Until then, I think it's time to kind of be in scalp mode, which is more or less how I've been trading myself, which again, it doesn't mean I ever change my trading plan. It just, I'll be more aggressively taking profits as the market is choppier. So the market's not open tomorrow. Sam, I just got your message there. All closed up. I'm just double checking that in case I'm wrong, but pretty sure it's President's Day, right? Yeah, Monday, February 21. All closed up tomorrow. So basically going through the individual markets here. KIE, which represents our insurance names. Yeah, it's a holiday. That's what I figured. Well, yeah, but the all the U.S. exchanges are shut. The NASDAQ and the NYSE, I didn't check the Amex, but really, who cares about the Amex? But yeah, there's a good website you can actually go to if you're ever interested. That's where I go check. Just NYSE holiday market hours. And they'll tell you, half days and things like that. And then you're getting it right from the horse's mouth, so there's no confusion, right? And it spells out for the entire year, right? So April 15th, May 30th, June 20, that kind of stuff, right? Futures are still open. A lot of futures always remain open just because they're traded worldwide. So, for example, equity futures will still be open, but because equities won't be moving, it changes from there. Yeah, for sure. It depends on the exchange. But as equity traders, there's only two exchanges we give a shit about, right? We care about the NASDAQ and the NYSE. Unless you're trading pink sheets or something. So if you're trading pink sheets, then yeah, you could, but probably shouldn't. And then you got to also think, even if it was open, then, right, which it's not, say the pink sheets or something were open, even when all of the other markets are closed. Again, the NASDAQ and the NYSE is definitely closed. If you've got your pink sheets open, then the real question is they're going to be even less liquid and more dangerous than normal because nobody's trading them. If the rest of the markets are closed, no one's coming in. No giant institutions are coming in to trade pink sheets or whatever, right? So for all intensive purposes, the market's closed. Again, yeah, if you're a futures trader, some of them may be open, but again, you got the issue with if the stocks are closed that they're derived off of, it's not going to be moving as well. And they're probably closed too. I don't even know about that. So the only thing that you could really say has got a shot to be open is futures, right? And then it's like, do you want to trade? Like, how well will an ET or a futures contract when that future is the value is derived by or derived by the underlying equities, if those equities are closed. But yeah, I think like oil and gold, if you want to play with that, you can probably do it. But hey, if you're into crypto, you can trade those anyway. You don't need anything to be open, right? So XLE is interesting here. So we talked about how insurance is looking good, and so is energy right here. So XLE continues to be strong. We're just kind of chopping sideways here. If this resolves higher, then we can continue our ride into energy names. I've been in energy names for a long time now. So we can kind of continue that trend, which is beautiful that we're getting something. We'll get something going on for sure, right? Weird Windows 11 bugs. So I've been bearish gold here forever. Made okay money, basically scalping off this trend line. Right, took a short in through here, and then a little short in through here, and then I tried to get in through here, and this one got stopped out. But the more I look at this, now that the picture's changed and we've broken out as opposed to down, my bet was a breakdown. We've broken out. I'm a little bit more bullish on gold. I don't really see much in the way of here, so I'm not going to share this chart. But if you see gold start to base sideways or pull back or give something like that, maybe it's time to, switch up my stance and look long. My initial theory was that with inflation as worse as it's ever been and gold unable to go up, right, what's going to be the thing that's going to make gold finally move? It may have just been a war, right? That might have been what we've been waiting for there. So again, I'm still not a huge fan of that. of gold as an investment as a whole, but right now it's looking interesting. One thing that I will do is I'll take more of a closer look at the GDX, which is the Gold Miners ETF, looking at the individual companies as opposed to the currency. Like, for example, I'm in SSRM from right here. It was just a trade from the room. We've got earnings, but I really need to think of how much earnings would affect a gold miner. I don't think it'd be that much, to be honest. So there are some individual gold names which are looking interesting to me. As someone who's been a bearish on gold for a year and a bit now, just to show you, I will follow the price wherever it goes. And in this case, it looks like it may be something to look at. Other than that, really, you can see commodities versus growth names, value versus growth, however you want to word it, continues to work, right? So you want to look at it and say, if I believe inflation is going to continue, and I believe they're going to continue, or they're going to talk about raising rates and eventually raise rates and do all this, then you have to be in assets that reflect that for now. Now, this may be a buy the rumor, sell the news thing, which I'm thinking may happen, where everyone is getting up in arms and selling out of their growth names, selling out of anything speculative. I think Bitcoin counts as that. Right now, it's just a speculative asset like anything else. If those things are going to continue, then I think it's like, okay, now we need to switch our thinking into taking a look at when these trends will reverse, because the trends are kind of getting a little bit long in the tooth, right? So, for example, what we're looking at now is coffee, ticker just Joe, which I think is hilarious. But, the people who've had a hard time just buying growth names like Zoom and getting murdered, right? This is why I love and why I preach relative strength so much, is it's just an easier way to live being in stuff like this. But at some point, these trends are going to reverse, and we got to start thinking about that. If, for example, there is no war, or if something happens in which they're not going to raise rates, or as soon as the rate hikes already get priced in, right? That's what we need to start thinking about. But until then, so this ETF is MOO, M-O-O, which is just an agriculture ETF. This is basing right at highs. It's been flat for almost a year now, but it's definitely holding up well, way better than the market. So we got to keep that in mind as well. MDY, which is our small caps, I'm going to keep this because this note still remains, is still holding this support. It's not doing it well. It's barely holding the support, but it's holding the support in through here. Again, anything that's commodity driven, right? This is a corn ETF. You can see just broke out recently here into all-time highs. I believe all-time highs, if not all-time, then for a long time. Come on. Let's go monthly. Oh no, definitely not all-time highs, but highs for a very long time. Corn breaking out, so just showing us again, you got to be focused on the real stuff. There's a famous Jim Rogers quote, which was he was a great hedge fund manager for many, many years till he went absolutely batshit insane and moved to Thailand. But one of his quotes was that if you're in an inflationary environment, you want to buy things that if you drop it on your foot, they would hurt, right? So ignore software, ignore services, companies like this, but companies that make real things is what's going to do the best. XLP is very interesting here to me. So XLP is essentially your consumer staples. So, I give these descriptions every time for people who are new here. But consumer staples just means shit that you are going to buy, that you're going to buy regardless of what the economy or the market is doing. So Johnson & Johnson, for example, right? People are going to buy baby wipes and soaps and shampoos and toilet papers and things like that, regardless of whether or not their investments are doing great or their investments are doing poorly. So XLP is interesting. Again, if the market's going to continue to be weak and we break out of this little flag here on XLP, I'll be interested in that. Again, for those who don't know, I don't actually trade these ETFs, although you could, and maybe a super rich me 10 years down the road only trades ETFs because I'm very lazy. But for me, I just want to know what sandbox I'm playing in. So I will then, if XLP looks like it's going to break out, I can, when I'm doing my scans and I notice names that are staples names within those scans, then I can kind of really focus on those. So Homebuilders is interesting, weaker than a lot of what we're seeing out there, but at this support. So I just wanted to point this out. All right, Homebuilders kind of just hanging out down here. Could be interesting to see if these things continue. Right, if we bounce off here, I'm not one, again, I won't buy the support pullback. I will buy some sort of move off support. But because it's one of those things, it shows how trading off news and economics and that kind of stuff doesn't make any sense. Because if I said, hey, you in a vacuum who's never looked at the markets before, and you sat someone down and you said, home prices are killing it. Home prices are just exploding. Homes are getting insanely expensive. You'd probably think, well, maybe home builders would be a good investment, because if homes are insanely expensive, then it's more of a reason to buy home builders to build new homes. It turns out that's just not, market doesn't work that way. That'd be too easy. So this IWM is very interesting. So we talked about the SPY, which is our large cap name, was holding up the best. Then we talked about IWM, which is mid caps, was doing a little bit worse. And then we talked about, MDY for mid caps. And now IWM is your small caps, which is looking the worst, and may have just broken down out of a bear flag. So this support zone that I drew in here was support for the longest time, going back a year and a bit. We broke down under it, and then when we rallied up to it, you can see how we pretty much just hit, it's going to be at 210-ish, give or take, right? So again, zones, not exact areas. And when we hit it, we broke off it, which is very kind of typical technical analysis. Prior support becomes future resistance, all of that. So I was wondering if this kind of bear flag, would it resolve lower? We closed below that on Friday. So unless we bounce back up and retake this 210 pretty quickly, it's not looking great for the small caps, which again is just more of the small caps quite often are just more speculative, risky investments. So speculative, risky investments don't do well in rising interest rate environments. People want to be invested in things that they know are going to pay them now, right? And I get the question all the time when I talk about it is why? Why is it that all these growth names are getting hammered now and the value names have been doing so well? And it's simply just put that if I'm basically saying the cost of borrowing is zero or near zero, which it's been for a long time, basically that means I can borrow money and I can put it somewhere, and then I don't care if it pays, if it pays me back 10 years from now, who cares? Because the cost of borrowing that is near zero. Now, as that increases and the cost of borrowing money increases in value, well, now I don't want that money 10 years from now, because, say I give you $1 million today and I think I'm going to get $2 million 10 years from now. Well, in a low interest rate or even a zero interest rate environment, that's fine, because I'm not paying anything on that $1 million. So I'll take an extra $1 million 10 years from now. Who cares? As the cost goes up, well, now I'm paying more monthly for that money that I loaned you. So I would rather, instead of having it in 10 years from now, get my $1 million profit, I would rather get less money but sooner, because that cost of capital has increased. So you'll notice things. This is why commodity companies increase. This is why high dividend paying companies increase. This is why value type companies increase, because their value is right now, as opposed to something like a Zoom or a Peloton that has little to no value right now, but they're betting on what's that value in the future, right? So, little economics lesson. Again, not that this matters to trading. It's just fun to speculate about. The Qs are looking bad, right? These prior lows right here, we're right at them. The only thing that I think kind of saves a lot of this market right now, solar just looks like death, right? A little bear flag under that resistance. The only thing that I think that saves us right now is some sort of shock news event that kind of reverses this sell-off in people's faces. ARC, I've been putting this comment in here for a while. If you're still chasing growth stocks, shake your head. Like, what are you doing? There's been so many people who I hear all the time say, okay, I'm going to take a shot on Hood. I'm going to buy some Robinhood here, see if it bounces. I'm going to buy some Peloton here, see if it bounces. Right? I'm going to buy some SoFi, right? It's like, just why? Why are you doing this to yourself? Like, who hurt you? Whereas what I'm looking at, and I'll show you the watch list because we're going to get into that in a second here. I'll show you the watch list is not bottom picking junk stocks that no one likes anymore. Just want to make sure these are boom. Hood has strong support at 0. I do think I'll summarize my thoughts on the market in a second, but I do think like probably the worst saying in Wall Street ever is the buy low, sell high. And I do think that basically what happens to people as a psychological phenomenon is when Hood is looking like this, they think there's support at the bottom of the chart, even if it's only like, a psychological thing, or that there's resistance at the top of the chart. And that's just not, right? You can do that, and then it just kind of disproves everything. So I do think that's what happens. Or, so it's either, right, the combination of, there has, like how far down can it go type of thinking. And then the whole buy low, sell high, which again is the worst saying, I think, in all of Wall Street. But I think part of it also might just simply be that humans like to root for an underdog. It's like, you watch any movie or anything like that, and it's always the, right, like Rudy type of thing where it's, can this little guy compete with whatever. So I think that part of it as well is people like an underdog and they want to just, bet on that thing going. And I think maybe it's because, again, when a stock is doing well and it's up high, people don't think it can go any higher. But when it's down here, they say, well, if it just gets back to 30, I'm good. And it's like, well, if you were buying stuff that's just going up, then you don't have to worry about that, right? Like AUB that we have on watch. People like this. People don't like Robinhood, and they don't like Peloton, that kind of stuff. But yeah, I do think, David just saying about the underdog, I do think there's just that natural psychological instinct of, I want to bet on the underdog and win, as opposed to betting on what everyone else, like the whole, I want to go against the herd kind of mentality, which just gets so many people in so much trouble. All right, so we're going to go through the list now as I have it, and then we are going to add and remove from that list anything that I don't really like anymore. So YALA, basically what I'm doing here is I'm just playing this support right in through here, just trying to say, as long as we're above this, I can be in, just playing off this bear trap. So as opposed to buying the thing as it's selling, I'm just trying to play off this bear trap, but that just hasn't been. I've been in this for a few days. Not really interested in that. Plus earnings coming up. So BKE, same kind of play. I was trying to play off this bear trap. That's not working. So I'm going to remove that one as well. Been on there for a few days. PGR, so progressive. So I talked about how the KRE or the KIE, that insurance area, is doing well. So this one has some anchored VWAP support right here. Again, nice strong name pulling back. I'm going to leave this one on the list. AUB is a like a credit union type of thing, doing very, very well, holding really, really high up as the whole market's selling. So I am in this one. I got in as we broke out here, and it's just been chopping around ever since. My stops under there. But I'm going to leave that one on the list because I still like it. General Mills, nice kind of quality bull flag. Again, it's in that consumer staples area. So that XLP that had a great chart on it. I think General Mills is the same kind of thing going on, where again we're holding up really well in comparison to the market, and it's a staple. It's one of those things that if consumer staples start to break out, this one will look well. FLO flow, I got in this one as we broke this downtrend line, so I'm in this one currently. One thing I really like about it is not just this high tight base that's going on here and the insane relative strength to the rest of the market, but it had earnings and then it did this where it dropped down here throughout the day, got a bunch of people in short, stopped out a bunch of people, and then reversed. So we have a little bear flag going on under the support zone. So I'm in this one, but I still think, if it closed here on Friday or on Monday, I still think it's a good one. OI, which is a glass manufacturer, ugly day on Friday, but I still like it if it can get kind of above this area. I think I'm missing this. Yeah, so anchored VWAP support right below. PCAR, same type of thing, just a car part manufacturer, I think. Holding up strong. Again, drop it on my foot, it would hurt type of deal. Nice bull flag there. I like that one. DSKE, nice bull flag there. Holding up very well relative to the market. I like that. Visa, as long as it stays within this kind of bull flag right here. So I had a nice pop after earnings. Again, I don't need to read earnings or know anything about earnings. I just need to know that whatever happened in through here, the market was certainly happy with. It not only gapped up and then ran off of earnings, it went up for another few days, and now it's just kind of been consolidating and pulling back. So if this breaks, I think we got some continuation there. And CAG, which was from TI Strength last week. I actually just stole this one from that. Looks good. I still think you might be able to get involved this one, so I'm going to leave it there. So I have 11, I've got 10 slots, which means I have a potential of 5 more that I can add. I just like to permanently keep my watch list under that 15 ticker number. And it's just because I want to make sure that when I come in, again, anyone who doesn't know, I do all of my trading when it comes to swing trading at the end of the day. I do some scalping throughout the day if I see opportunities, but mainly I'm a close-to-close guy. So I open up all my swings on the close, and then I'll hold the next day. I generally won't, I'll have stops in place and things like that, but I won't even really evaluate the security until the close that day. So everything I do is basically on a closing basis. So I think if this one closes in that area, I think you're still good there. So main reason I like to keep that list short is just to make sure that on that close I'm not getting too overwhelmed. So just looking at the market here, I had it up. So when it comes to this, I think you just watch this in the SPY. If we start to get closes under here, it's going to be real interesting. What I do when it's real interesting like that is I shorten time frames. Right? I don't want to be holding for weeks or even 5-10 days. I want to get in. If I can get some money out on a position right away, I'm taking that money on most of the position, whereas normally I may sell a third and then sell another third and then trail the third. In less desirable markets like this one, I will most likely sell like 2/3 really, really quick and then leave the rest to see if I can get some runners out of it. But again, you just got to be tighter. William O'Neill's The Cure for the Buy Low, Sell High. Yeah, he does a lot of good stuff, right? One of my favorite quotes, I'm pretty sure it's O'Neill, but one of my favorite quotes from him is that more money is lost predicting a bear market than in a bear market, which I always thought was a really good quote because there's a lot of people out there who can't survive a bull market. So it's like, how do you survive a bear market? This is also the time where we'll go through, if you got any charts you want me to look at. I'm just going to do some scanning here with trade ideas. Again, you saw me use TrendSpider for my charting, and then I use trade ideas for my scanning, and then I do all my trading within trade ideas as well. If you're interested in either of those, links in the description below. That isn't an affiliate link, so it will put a little money in my pocket if you're interested in trying those out there. I just like to be upfront about that. So a lot of these are the TI strength names. I didn't like too many of them. Campbell Soup is kind of interesting. I did want to scan through some of these, like Monsanto was something that was interesting. PBIR. Monsanto is just a little bit too done for me. Some of these Devon Energy, a lot of these names are holding up really well, like Dollar Tree. Dollar Tree holding up very, very well. Just a little bit too much on this one candle done. So I need to see what's going on in this area. Is Microsoft going any lower? No one knows. And if anyone tells you they know, run from that person. They're full of it. Now it's in a downtrend. That's an ugly looking chart. So I wouldn't bet on it not going down, if that makes sense. But right, I also wouldn't take a short here because that's not part of my trading plan. But it's there's no reason to think that it would just bottom here after being ugly like it has been. DLTR we just went over. I like it. That's a big candle to hit this resistance zone. So I would just watch and see if it can get over, say 144. That's kind of interesting. INFN. Yeah, that's just gross. It's an ugly chart. Like that's $10. So from there to there is 10. You got resistance at like 950. Just look at the wicks on it. Just doesn't trade very clean. Cake. Yeah, Cake's just a beaten up junk company. Yeah, I don't see anything there. Nothing special. Plus, it's up a huge amount in a row. All ALL. Oh, this one looks a little bit more interesting. Got a sideways chop. And again, that's in that insurance zone. Remember, I was talking about KIE as the insurance ETF. Just know you've got a lot of resistance above you. So not really a setup that I super like, but it's interesting. Yeah, Cheesecake's Factory is cake. They got a pretty good, pretty solid name there. Good ticker. MLI, slow, interesting. A little flag going on there. Not part of my trading plan, but I can see the merit. You got, big area here at 60 where you got this kind of gap fill at 60, and then you've got all these topping tails. So I would watch those as well. Bitcoin's moving higher. No, it's not. Not at all. Right where we were just talking about it earlier. Do I sell calls? Not really. Definitely not naked calls. But I will sell covered calls from time to time. But it's only if I'm in a position that I've already taken a bunch of profit on already. And, something I'm planning on holding for a longer period of time. Let's go look at, so this is becoming one of my favorite scans right now. And Trade Idea is just called a, so you got to be careful with comments like this. It may be moving higher right now. So it's, again, if you're scalping Bitcoin in a 15-minute chart, if that's working for you, great. But you careful speaking in absolutes. Okay, so this is certainly not even going higher on a 15-minute chart. Maybe you have a plan that says you think it's going to go higher, but you don't know. And looking at that now on a 15-minute chart, that looks like one hell of a bear flag to me. Right? If you're going to trade in the direction trend, but there's nothing right now. It's certainly not going higher right now. To say that absolutely like you did, that's just not objectively not true. And just be careful, because it's one of those things, it kind of sounds like nitpicking, but when you frame something in your mind like Bitcoin is going higher when it's just, patently not, it can bias you, right? And the last thing you need to be is biased in trading, right? So again, if you've got some statistics based trading plan that says that it's a good buy here, have at it. For me, as more of a trend guy, if I was trading this on a 15-minute time frame, well, you had a down move and now you're just kind of really consolidating. So, as a trend trader, you got to go in the direction of the trend for me anyway, right? Now, again, what I just to reiterate in case you missed my comments on Bitcoin, I think as long as you're under 41, you got to stay out of the way. If you're over 41, I think you're interested. I was long the last time it got over 41. I got out a little bit here and then it kind of crashed as well. But, it's as long as you're under that 41, you've just got that huge amount of resistance right here, right? And again, not to single you out, I just think self-talk chats are important for sure. The only thing I just got to do this before I forget. So this is just the economic news for Monday. And there is, there's nothing on Monday because it's a bank holiday. But on Tuesday, PMI might be anything that's a price index or anything like that could be. This is inflation related, so might be market moving right now. But nothing huge, right? No Fed speak or anything like that. But I always just like to keep an eye on what the economic news du jour is. Oh, hey, Mighty. I don't know which one you're talking about there, but nice having you. Nice having you in. I know people who sell cover calls that justify their losses. Yeah. No, cover call strategy is good if you have a longer term view on something. So say you're trading a stock on a weekly chart instead of a daily chart. So we can go into like a weekly chart here. So say you really like flow for the long term. Then what it may make sense to do, and knowing that this company, right, they make flowers, cakes, and flowers.com. I think they're just like a flower delivery service, right? If you take it on a break here and you've got to stop here and you like sell a $30 call, and then, a couple weeks go by and you cover that call. So as a way to supplement in income on something that you think is going to be a slow grind up move, it makes sense to me. Now, I completely agree with your comment there that the people who try to sell calls to get out of an awful position, I think makes absolutely no sense. Just cut it, right? So if, say you bought flowers because you liked the long-term chart and you sold the $30 call, if this thing breaks down, you should have a stop just like anything else. I talk about it in the room all the time. Saying something is an investment is not an excuse to hold it if it sucks. Perfect example I had, I don't do a lot of investment stuff, but MindMed, I was long, I won't show it here, but there's the Canadian version of MindMed, and I was long when it was like at $1, got up to $3-4, spent some time around here. I think I bought some more in this area as well. And then it broke down and I got out. And that was a longer term investment for me. And now I'm just not going to hold something as it crashes from $3 down to 1. I still like the psychedelic space, and I think there is some investment to be had there. So maybe if MindMed puts in a higher low here and breaks this, then I'll get involved again as an investment, but then I'll have a stop. Like, I just think the difference to me anyway between a trade and an investment is just time frame, which means I'm going to be taking it smaller. I'm going to have a much wider stop, but you still got to know when you're wrong. Right? It's just, you just have to. Yes, one should really watch the self-stock. Yeah, I really, and it is kind of a trigger for me, but when traders talk in absolutes, it's like you don't want to do that, because in your head you're kind of tainting the fact that you know something. And I think it's important to know. And I'll say this openly, we've been here for an hour. I've done analysis on crypto and Forex, and now we're in the stock market, and I'm going to make this list of 15 stocks to watch tomorrow. And all right, this all gets shared on my website. If you're interested, links in the description below. But I don't know anything, right? If we open up on Tuesday, up a huge amount, then all of the kind of cautiousness I put out there of some of these bear flags looking like they're materialist, it's out the window. It's time to change. Like we talked about with gold. Let's actually just go into, do it here, GLD, right? So I was talking about how I was bearish gold, and I was short here, and I was short here, and then I shorted a little bit in through here. And I talked about now, as long as we kind of hold above this downtrend line, I'm now bullish on gold. It's because I don't know anything, right? No one knows anything. It's just, right, what is it that you're seeing? What is it that meets your trading plan, and trade those things? And if it, right, ignore everything else. So when you start using self-talk that's absolute, it gets people think that they know something. And it's just very important to know that they don't know, you don't know anything, right? All of this work is to try to get a couple more percentage in the win column than the lose column, and then the rest is just done by trading plans. So speaking of which, the new scan that we have in trade ideas here, it's my face in the way, but it's the very bottom one in the Market Explorer called Strong Stock Pulling Back. This is an algorithm that I designed that essentially just looks for that, strong stocks pulling back. But there is some statistical advantage to these pullbacks, trying to figure out, I did some broad-based testing and shown that these individual names that are pulling back have it's like a 53% chance to be higher over the next anywhere between 5 and 20 days. And now for me, then I just want to narrow in on the ones that I like. So this is what I'm using to scan this, right? Rules are to protect us from ourselves. Yep, that's perfectly put. You just, again, just come up with a plan. The amount of people that I run into in trading that haven't built a trading plan is terrifying in my mind, because that's the bare minimum that you need to do in order to be successful. is to have your own written and tested trading plan. And the people who, they just will put 100 grand in an account, just start trading it without any kind of written plan that has any sort of testing behind it. It makes you wonder, would they buy a convenience store or something like that and just throw 100 grand into it without looking at the books or without seeing if it's profitable or anything like that? I believe it's a barrier to entry problem where, buying a business, there's a lot more work that's just seen to be involved, but there's people out there who will just go, oh, I watched a video about trading, so now I'm going to risk my money at it. So there's nothing I liked there from that pullback algo, to be honest. So now I'm going to go into the bear flag one right here, or bull flag. So all of these are bull flags to some respect in some time frame. For me, I'm looking for ones that are kind of strong. Oh, that's the bear flag one. That's why that one looked bad. Let's go to the bull flag one. Takes a second for these to load. Pretty good at trading options quickly during the day, buy calls. Is it possible to make it 10% every day and compound it? Absolutely not. That would turn, so a 10% a day compounded would turn anyone into a trillionaire in like a couple years. This is absolutely not possible to make consistently 10% a day. If you figured out a way to do it, like get off the internet right now, don't say a word and sit there and quietly do it. But I kind of guarantee you that you haven't. So it's certainly not, right? Because if you're making 10% a day, you're risking 10% a day, right? So you have 4 losing days in a row and you're going to be pretty much blown out. So again, that's one of those, again, absolutely not. And if you are anywhere on the internet where someone's telling you, oh yeah, you can make 10% a day or even 1% a day consistently, that is just the largest amount of horseshit. Right? Again, the best traders in the world are gonna, if you read any of the Market Wizards books, which I recommend reading all of them. I actually re-listened to the newest one, the Unknown Market Wizards, the other day when I was just hiking in the woods. Great books. These guys, which again are the best of the best that are getting interviewed by Schwager, 20-30% a year on average. That's where they're batting at. So, right, if the best of the best are making 20% a year, you ain't making 10% a day. I guarantee that. It's one of the reasons why I don't talk about money much at all, right? Because let's say, for example, I don't, but let's say I have a $10 million account and I'm making 10% a year. I'm making $1 million a year. That's only, it's 10%, right? So the dollar amount that you actually make or lose is just solely on your account size, which is why I don't think there's a lot of value in talking about that kind of stuff. But yeah, I don't mind talking about percentages, and yeah, 10% a day is just absolutely not something that you'll ever do consistently, right? Could you have a week where you make 10% every day for that entire week? Yeah, certainly. Is it going to last for long? Absolutely not. And, just the mathematics behind it. So say you could make 10% a day with 90% consistency, but to do so, you had to risk 10% a day. And again, 90% consistency. And again, the best traders in the world are like 55 to 60% win rates. So if you're 90% consistency making 10% a day, risking 10% to do that, you will blow up your account a lot of times, because one of those things that people underestimate how often strings of events can occur, even if the statistics are really stacked against them, right? So, some people say, well, if I'm right 90% of the time, only wrong 10% of the time, what are the odds I'm going to lose 10 trades in a row? Well, depending on how many trades you do, it will happen way more than you think. And losing 7, 8 trades in a row will happen tons of time. Losing 5 trades in a row will happen all of the time. So that's why most people recommend, and I'm kind of with them, like a 2% value of your account risk per trade maximum. I'm more of 1% to 0.5% is where you should be living. Because again, risking 10% or even 5%, if your strategy has 2-to-1 risk reward ratio, you're going to get snapped a bunch of times, like a bunch. Especially with options, where God forbid there's a halt or something, you're gonna be up shit's creek. Dole is interesting here. Bananas. Did I have Dole on watch recently? Did I buy Dole? Why didn't I? I put this line in here, so I obviously was looking at it. I certainly didn't buy it. That's an interesting looking one. I just 5 candles up in a row. You know what? Screw it. Yeah, see, we have earnings March 31st, and they have earnings March 1. I wonder if maybe I saw this and then there was earnings close. Because I've noticed that TrendSpider moves their earnings line relatively frequently. But I'm going to put Dole, I'm going to put it like, 15 and then 14? And it's one of those things that this goes well with the whole real things. Buy bananas, I guess, if the market's going under, buy bananas. So really, again, what I'm scanning for, like DKS or DSKE is already on the list. I'm just looking for things that are holding up well. We went over all of the market and we saw that most of the market is under pressure. The large cap companies being the only thing that are really holding on, the rest of the market being under pressure. So as a relative strength trader, I'm just looking at what's not been under pressure. So that's why I'm focusing on this bull flag scan right now, because it's just going to show me stocks that are, right, sometimes they're kind of ugly. That's why you got to filter by eye, but right, this thing's up a bunch and now it's just consolidating. Right, so nothing that I'm interested with this one, just doesn't move as much, but right, up a bunch. Now we're consolidating here. So I'm just looking for ones that stop out. Yeah, ask Livermore about leverage. He again, Reminiscences of a Stock Operator is another kind of must-read trading book. And yeah, you go through this guy's up and downs about, oh, I figured it out, and then blow up, figured it out and blow up, until he met his untimely end. But really, it's like if there was one book series for new traders that I'm like, you gotta read, it has to be the Market Wizards book. It just has to be. He just does such a great job of hope. Yeah, I'm gonna watch this. What's like 1740? This one's a real slow mover. But if that's all there is, that's all there is. So yeah, what I like about the Market Wizards, if you're going to check it out, which I certainly recommend, there's tons of them. There's like 4 or 5 books by now, is focus on the difference between the difference and similarity between all the people. So people who don't know what the Market Wizards books are, it's just interviews with top traders. And to get on this, you generally need outstanding performance, but you also need outstanding performance coupled with evidence, right? And it's, not just broker statements, but it's generally, you gotta know the guy. There's got to be people in the industry that knows the guy, that kind of thing. So these guys are legit, and notice the similarities with them, right? A lot of it is going to be manage risks responsibly. It's going to be a lot of good, asymmetric, I guess, risk reward is going to be a good way to put it, right? They're looking to risk 1 to make 10. They all have different trading styles and different trading metrics, but I think it's important to know that that's their own style and metric. I don't know. Why did I take this one off the list? Okay, I'm putting that back on. I don't know why I took Hershey's off. I'm going to put 203, 200. I already got that filled in. But yeah, so the Market Wizards, fantastic book. It kind of teaches you that you read about all these people and they all have different trading plans. Especially, I like the newest one's called the Unknown Market Wizards, and these are guys who aren't really Wall Street guys, but a lot of influencers and things like that. So they've got like guys on there who trade based off of social sentiment, and guys who trade based off of fundamentals, and some people off of technicals, and all these different things. So what you understand is that the way they're trading is irrelevant. You're not just going to go, okay, I'm going to follow what's going on here. But the fact that they all came up with their own style and their own plan and their own reason for what they're doing and why they're doing it. And then you say, okay, well, where are they similar? And where they're similar is on things like a focus of risk management, a focus of, staying in the game for the longest period of time, where all of these things kind of come together. So it teaches exactly what I think most traders need to learn, which is stop being lazy, come up with a trading plan, write it down, follow that trading plan religiously with a focus on risk management, and then everything else falls into place, right? Understand that you'll never know anything. There's no one out there who knows, who has I'm the guru with the answers. But the people who just establish their plan, stick with it. You guys have probably noticed if you watch a stream for a length of time, my process on the order of which I scan things, the charts that I go through are pretty similar. And it's because that's my process and my plan, which may not work for you guys. And that's why, I know that in my website, link in the description below, where I share my process and my plan, as not an alert service, because I don't believe in those things, will never be insanely popular because people are gravitated towards this, tell me what to do. And I'm not going to do that. I will show you what I do, and then hopefully you stick with me for a few months and say, okay, that makes sense to me. And then if you want to hang out more in our trading chat room, whatever, great. But, I want people to watch my process in order for them to build their own, which may be completely different from mine, and that's fine. It's just important that you have that and that it's not purely discretionary, because when something is purely discretionary, it's going to be one of those things that, when you're feeling good, you'll trade good. When you're feeling bad, you'll trade bad. But if you just have the kind of consistent process, I think that will help you out the most. When I tell every style that works well over time includes risk management. Yeah, totally agree. I'll go one further, and I think almost any style can be profitable over time if it includes risk management. So I'll go one step further than you, which I think you could take any. I am going to look for stocks that are in uptrends, and I'm going to define an uptrend by XYZ. So let's say a 20 period moving average that's pointed up, just the pull something completely out my arse. I'm going to look for stocks that have a 20-period moving average that's pointed up, and I am going to wait for them to put a hammer candle in after a 3-day pullback, and I'm going to buy the high of that hammer candle, and I'm going to put a stop below the low, and I am going to risk, or I'm going to try to make 2 times my risk. Just completely pulled that trading plan out my ass. I bet you over the long run, followed with kind of extreme discipline, that would work. Right? Someone could test it, but right, just any sort of a systematic trend following with a good risk reward. You know, you're not buying stocks that are getting hammered. You're not trying to pick bottoms. I think those things in the long run will most likely make you money. And I would go as bold as saying most any trading plan with risk management would make you money in the long run. I think you could probably, like, if you flipped a coin when a stock gapped up on whether or not to fade or continue the gap, and then did proper risk management. Again, it's one of those things that it's everything we're doing is to weight the coin just a little bit in our direction to make things smoother, right? But find any good ones today? Not yet. Michael, well, you'll see them in the list too, right? You're a member of the pro site, so you'll see that. But really, this is the 3rd scan that I've gone through, and there's just not a lot that I'm spotting out there that I really like. My analysis of the markets got me a little bit more worried than normal. Everything on the list, we went through it, is all the most boring possible names out there. But it's what's working, so we got to stick with it. So I think for a little while longer, we're going to just be playing this game where, what's a boring company that I can just buy and hopefully pull a couple percentage out of. And I think these are the moments where they will weed out the people who are successful in a raging bull market versus the people who were successful because they've had a systematic trend, right? TMUS, that's T-Mobile. That's kind of interesting. Little bull flag, gap up on earnings, consolidating nicely. Keep an eye on that. Because, I think things are going to continue to be rough for a little bit, which rough means, if you're buying junk, you're going to have a hard time. We got to put Twinkie in there, right? When's March 1st? Oh, never mind. Oh, no, you get a week and a bit. Week and a day, right? Let's put Twinkie in there. Can't find anything else. This was a Wall Street bet stock at some point, wasn't it? Just a nice looking little break up here, and then we have this consolidation going on. Twinkies. Oh, sweet. Anytime we get spam like that, it makes me happy. It means I'm popular enough. Again, I never see how many people are in the room. I see that there's 8 likes. I don't know if that means there's 8 people or if there's one guy who liked it a bunch of times, but anytime I see spam bots like that, it's like, okay, well, we're getting somewhere. So what we'll do, 2120 on this is probably the best way to something like that. There's got to be an end of the world joke there, right? If we're going into World War III, people still need Twinkies, something like that. Again, I bet you Twinkies have something to do with the consumer staples group. It's a pretty common. Everything we're finding, like if I go down the list of my stocks, we found consumer staples, we found natural resources, we found commercial banks, We found glass, a company that makes glass, a company that makes car parts, right? Everything we're finding is in this value driven type of market for now. Again, I think at some point we got to reverse these trends. It's just has to happen at some point. I think it's going to be one of those things maybe after the March meeting when they actually come out with this is how we're going to raise rates, or if they came out with some sort of schedule on how much they're going to raise and how quickly. Because again, I'm one that I really like the whole buy the rumor, sell the news type of thing. And I think all of these value names are getting bought up on the rumor of not, we know they're going to do it on these rate increases, and then when the news comes out for the rate increases, I think that's when you're going to get this kind of flip back where they're going to go, okay, right, and the band-aid's off now. Now it's time to take a look at things. Just seeing if there's anything else I want to. Do I even want to look at these RSI divergences? They make for some good charts, but I'm just so over bottom fishing these things. Let's put on the RSI. All right, so this scan is just looking for RSI divergences. If you don't know what that is, basically price moves lower. The momentum index, which is RSI, moves higher, showing that a short-term bottom may be in. For me, I kind of like these, but I only like them after support has been held for a length of time, or maybe the RSI divergence is a pullback in an overall bullish trend or something like that. Again, I'm just not one that. The more I do relative strength trading and don't want to use the term ease, but the simplicity of it, the more that's all I want to do. It's way less exciting than buying, trying to pick lows and things like that. But it just makes life way simpler if you're just buying stuff that's going up as opposed to trying to chase stuff that's going down. But if I were to do something like that, it would more likely be on something like this that's put in more of a long-term base and is now starting to trend up. So like LLNW, right? When I trade a rounded bottom or some sort of bottoming pattern, I want to see it actually bottom, and then I want to see a little bit of an uptrend occur. Right? LLNW was actually one that we took in through here, and then just got stopped out on that one. Yeah, I'm not even going to look too much at these. All right, guys, so I will open it up to any charts you want me to look at or anything like that. I didn't find much. I got to say, overall feeling after going through that, which is one thing that, as a hippie guy like me, I like to sit back and think of that. Slightly, I don't want to use the term worried because I don't care. Oh, someone's burning something. If that fire alarm continues for any length of time, okay, it's over. So either the house burned down or they fixed it. Again, I don't like the term worried because I will just trade whatever the market gives me, right? I obviously like bull runs better because it's easier. Anyone can make money in a bull market unless you're one of those like perma bear, I'm always going to fight the trend regardless of what it is kind of people. But I think this is our line in the sand here on the SPY. I think a close or two below this zone, things get really, really messy. What really kind of got me more or less kind of concerned is the very ugly look here on the IWM. The fire alarm would worry me. I just, if I hear screaming or, it's 4:30 my time, so I'm just hoping that it's a a delicious supper that may have just been cooked a second too long. But if I hear screaming, then that's when I'd move. MDY is barely holding on, right? RSP, which is our equal weight, that's got this line in the sand at like 150. Like everything's got this line. So until then, I'm not trying to get too dramatic about it. If we hold this and go, I'm not a news guy, but right, you've just got to know what environment you're in. I'm not one that I ever trade off news. I usually try to avoid news, but obviously what's going on right now in the Ukraine is going to have a big deal to do with it. If something breaks out, which is one of the reasons why I think we're getting the weakness right now, is there's a certain amount of deleveraging happening in institutions where they're pulling back what they have in the way of they're just positioning themselves, right? So like there's been all these studies done that there's more put buying going on right now than almost anywhere else or any other time in history. Sentiment is the worst now than it has been. It was the sentiment is worse now than it was during the pandemic. And sentiment data is something that I would love to start playing with. As a contrarian, right? If all of the, I think sentiment data is one of those things that it doesn't matter unless it's at an extreme. If everybody is bearish, then I think right now is when you would look for back to the chart for times to get long and vice versa. In the middle, I don't think it matters, but we are at extreme bear sentiment. So I think that's what's causing this pullback. I think what will happen, and again, there's no way to trade off these scenarios, so I'm just talking for fun right now, right? Russia pulls back, everything's sunshine and puppies. The rip your face off rally will be monumental because if you combine that with the Fed coming out with some sort of statement or even only raising rates a half basis points, I think the market is pricing in a full or a quarter, a half basis point versus a quarter. Fed. Well, what's the website? Fed stats. Probabilities. Let's do that. God, if anyone knows. There's a website out there that basically pulls data from the where is it? It's I don't know. I'll find it. I'll find it and I'll post it on Twitter. But there are places out there, and what they do is they look at the price of the interest rates as they're trading and come up with probabilities. So right now there's a 90-something% probability that they raise by, I think it's like 99% that they raise by a quarter in March. And then there's like, I believe it's like a 70 or 80% probability they raise by a half. So, say if there's some sort of wording coming out from the Fed that they're definitely not going to raise by a half, and the Russia-Ukraine thing resolves peacefully, there are more people out there who have spent money on hedges and who have positioned themselves short than there has been in a long time. So the rip your face off rally could be immense. Other than that, like it just seems like all of the bad news is priced in and the market hasn't taken that much of a hit. Again, assuming Fed rate, is that it? Yeah, okay. So the investing.com. This isn't the same one that I was looking at, but it's the same kind of thing. So, right, so for March 16th, there's essentially a massive probability. I think if you break this out even further, that's the problem, is it's clumped. I think there's like a 99% probability increases by a quarter, and then like a 70 something percent increases by a half. But these are all priced in. So my theory is that if everything happens the way that it's priced in, oh, these are ending. Okay, I get it. So this is an ending value. So they think the probability that they increase by another quarter to a half is really high in May, right? Really high in June for just a quarter, I think, this time, right? And then now is where it starts. So when you go to July is when people start to kind of debate what's happening right here. So what I always look at, I never look at news. Anyone who knows me, I'm not a news guy. But what I do is I always want to say, okay, this is what's expected. When that does or doesn't happen, what's the market happen, right? So there's an old trading adage: the best thing you could ever see if you're long a stock is bad news come out and it doesn't sell off that much. And there's another saying that if you're ever short a stock and bad news comes out and it doesn't sell off, you get the hell out immediately, right? So it's more about the reaction to the event that I'm interested in as opposed to the actual event. So the question that we all need to ask ourselves as we go on our way and think about the market is, what is a shocking event that could occur that's going to hurt us versus what are the shock events that would help us, right? So if the market thinks that a half rate basis point increase is if the market thinks there's a war going to happen with Russia and Ukraine, you got to think, where is the shock coming from? Now, again, no one knows anything. The shock could obviously come from anywhere. But just the way I look at it is more about, I think, the probability that a good news shock event outweighs a bad news shock event. So a resolution of the conflict or a interest rate raise. A lot of these brokers and JP Morgan, these idiots, have been saying, oh yeah, there's going to be like 7 raises this year, or they're going to do an emergency, 1% raise or something like that. And it's just not. Everyone's overreaching. So when it comes in less damaging than we thought, maybe that's when we get this growth value flop back. But, and a last point on this, is that you don't need to be the guy to catch the bottom of these growth stocks. If Robinhood is going to turn out to be a great company, it's not just going to overnight go back up, right? You're going to get an uptrend, right? Markets move in trends, right? So you don't have to pick the bottom. You can wait for an uptrend to start, and then as it starts, participate in it. Yes, you won't get the very bottom print, but you never will, right? The people who've been buying this thing the whole way down certainly did not get the bottom print. So what I would look for in these names is a pullback that creates a higher low, a break from that, and then, right, so when you start doing this, okay, now it might be time to participate kind of somewhere in here, right? Just trying to buy it down there, I just don't think is the move. What happened right after the Fed did the QE, the first one in 2008? Well, right, if you just go back in the market, it certainly didn't get hammered, right? If you go back when they stopped the quantitative easing at I don't know the exact date, someone may, but obviously it didn't kill us, right? So again, my theory, and again, this is just us shooting the shit, right? Because what I will do when it comes to my trading is I will look at my back-tested scans, I will find things that are holding up well, I will trade them, and over the long run, I'll make money. Over the short run, who the hell knows? But I just have it's one of those kind of gut feelings that everything bad that's going on is priced in. So maybe it's time to go, okay, let's look for things that held up well. And if you're interested in growth plays, what I would do is I would look at the growth companies that have held up the best and look at those, because they are the ones that I think will recover the fastest. Tesla, for example, right? If this thing digs in here and then breaks that kind of 950 again, maybe you're off to the races again. What I don't want to do is, right, play the ones that have just been absolutely shellacked, right? I want the point of relative strength is you're looking at it, and when the market is selling, you're saying, what didn't they sell, right? Q1 finished first quarter 2010. Yeah, I think I fully remember it doing fantastically well after that. Yeah, so some volatility around first quarter 2010, and then the world didn't come to an end. So I don't think it's going to this time. The question in my mind is always going to be, when are we going to get these things flipped? When are we going to get ARC and then Berk B starting to converge back down? And my point is basically just, you don't care. You don't need to pick the bottom of one and the top of the other. You just need to know eventually Berk B will start downtrending, just like we talked about with Microsoft. MSFT, geez, right? When the stock starts downtrending, get the hell out. When it starts uptrending again, get the hell back in. Kind of the long story short. So thank you everyone for coming. I think bullshit it there for a half hour straight. Appreciate everyone coming out. If you can leave a like on the way out, I appreciate that. If you want to check out my website, links in the description down below. For all you Stats Edge Pro members that are in here, give me 20 minutes, half hour or so. I'm going to take all of those charts that we printed off. I'm going to upload them to the website in the normal blog post section. And then I'll go over to our Discord and I'll just kind of ping everyone to let them know that it is done. Enjoy your day off, everyone. Again, appreciate everyone for coming out again. I'm going to take off here. Enjoy your day off. Don't think too much about the market and trade safe.